Good morning, good evening, and good afternoon, everyone. Ladies and gentlemen, welcome to Eye on Africa, an HVS panel brought to you by the Global Tourism Forum. While many of you are joining us in person in both Istanbul and Jakarta, many others are attending this event online from all across the world. It is therefore my pleasure to be joined by industry colleagues who have tremendous experience in Africa to provide an insightful discussion on the state of matters of the travel and tourism industry, discuss investment opportunities, development gaps, and the role of the government in supporting this sector. I am Hala Matar Shufani, the president of HVS Middle East, Africa, and South Asia. Over the last 10 years, we have worked on 400 projects helping owners and investors identifying suitable investment opportunities. And we have obviously realized the huge potential that the Africa market has, but more importantly, the changes over the last couple of years and the anticipated also changes in terms of segmentation product offering. I am very pleased to be joined by Ramzi Rankusi, VP Development Africa and Turkey for Radisson Hotels. Radisson Hotel Group is very well established in Africa, and my understanding is that they're looking to double their portfolio in the next 4 to 5 years. Ramzi's contribution to this panel is going to be very valuable in terms of what historically they have been able to achieve in the market, but more importantly, what is their development pipeline looking like and their relationship with the government and also owners. I'm also pleased to be joined by Bani Haddad, Managing Director of Aleph Hospitality. Aleph Hospitality is a third-party management company who has been extremely active in the market, specifically in Africa, and focusing on working with owners and investors in identifying the right development opportunity, but more importantly, the operating model. And finally, last but not least, I'm joined by Paul Gardiner, CEO of Mantis Collection. As probably many of you would know, Mantis Collection are very well established with successful product offering across Africa. The experience and the resort developments they have are very unique, experiential, and really they have been at the right start of taking us from the traditional hotel model into more of a unique experience, which the world seems to be looking at and where the real opportunities now lie. It would be interesting also to hear from Paul later on what their development plans are for taking out the Mantis Collection and really spreading it across the rest of the world. So we would hope, time permitting, to really look at a number of indicators, tourism and performance, historically, but more importantly today, what's been happening, identifying the development opportunities moving forward, looking at the government support and the real contribution of travel and tourism to the GDP and how governments are putting together efforts and visions in order to support the sector, and finally touching on investment landscape, what were the challenges and how are we going to go about these challenges. We would like to start off by sharing some of the tourism indicators just to really identify how important this sector is, what were the challenges, and hopefully looking forward to the recovery, but most importantly, our discussion will focus on moving forward from the current COVID situation, which obviously, as these slides will show, what has been happening in Africa is very much in line with what's been happening in the rest of the world. And the contribution of travel and tourism to GDP, specifically if we look at the number of markets in Africa, it ranges anywhere between 6% and 14%, which is very similar as well when we compare to the Middle East of Africa. This is typically with some markets really being much more diversified, while others being heavily dependent on the travel and tourism. And obviously these would be the worst hit markets in the current market condition. Specifically with the number of those markets showing on the graph, there are aggressive plans to further increase travel and tourism. We have the potential, and as we will see later on, the operators are obviously very much focused on growing their pipeline, and so are the investment opportunities. Moving on to really looking as to when we speak today, and this slide was last updated September 1, but my understanding not much has changed since then. I mean, specifically when we consider Africa, I think Africa and the Americas, both of which 64% of these markets, cities or these countries are still facing complete closures. And therefore, fast forward from when the lockdown started back in March, obviously there wasn't an expectation that it's going to take so long before some of these measures are lifted. This has naturally had tremendous impact on the tourism levels in 2020, but also, as we will see in the next slide, on the actual performance of the hotels or the actual opening and closures of hotels. When we look at international arrivals, tourist arrivals into the different continents, again, when we compare the 2019, where most of the continents have registered a growth of anywhere between 2 and 8%, the year-to-date 2020 data suggests that there is a decline of in excess of, let's say, minimum 65% being in the Americas and 69% in Africa. Again, I don't think this is surprising to anyone, but it's important, however, to look at these statistics in context and how does the African continent compare to elsewhere in the world. Perhaps what I would add is that Americas and Europe are definitely much more established markets or continents than Africa and to some extent the Middle East. Perhaps that we would have expected to see more flexibility and less of an impact. However, with the airport closures, I think when we're measuring international tourist arrivals in particular, this is how they were worst hit. Specifically for Africa as well, generally speaking, Africa has been very heavily reliant on international tourists. And therefore, as a result, year-to-date data is suggesting a 69% decline in tourist arrivals. So again, by looking at the world in general, there's a 70% decline when we compare to elsewhere. Asia, 86%. So this is definitely painting a very sad story, not just for Africa, but for the world as a whole. But again, as I said, hopefully our conversation will focus on 2021 onwards and how the recovery could look like and the opportunities that really lie in a continent where definitely is in a developing stage, emerging, and there has been a lot of interest in the last couple of years investing into Africa. As a result of international travel, tourist arrivals dropping significantly, the year-to-date 2020 occupancy for the hotels that remain open in the market is 58 is the highest in Asia Pac, and that's on account also of a much stronger recovery or probably domestic tourism in China. But when we look at the Americas, the occupancy is 45%, 39% in the Middle East, and 28% in Africa. The resultant RevPAR change, and although, again, when we look specifically at the rate, there hasn't been a significant decline. I think the whole idea is that the traveler is not traveling full stop. It's not going to be a function of reducing the rate. So for most part, hotels did not necessarily discount rate. It was just that the occupancy was missing. As a result of that, RevPAR has declined significantly across all the different markets that we have investigated, with the GCC at a minus 47% RevPAR decline and Africa minus 54%. Naturally, in some of these markets, as we would all agree, these are large continents. So if we take specifically in Africa, there might be some markets that have performed better than others. Likewise, in the GCC, there has been markets which have performed better than others, for example, including Saudi Arabia or Egypt. So just looking at what currently the existing supply of hotel rooms in the market and what the future pipeline looks like. At the moment, our data suggests 79,000 hotel keys are currently in the African continent. Specifically, we're looking at the branded supply with these figures. This is not to include every hotel product. Our understanding as well of the African continent, there are many and probably double, if not much more than that, in unbranded supply or locally managed small hotels with very little room count. But when looking at the branded supply, 79,000 rooms were available by the end of 2019, with an additional pipeline of 43,300 rooms. So that's a good increase of 50% in the next 2 to 3 years, which again identifies the opportunity. It highlights the development objective and target of the operators, but also the investment appetite as a whole. Considering the current corona situation and factoring in also many other challenges such as financing, there has been a number of cancellations. So our understanding at the moment that 46% of the new pipeline is likely to be completed in time. There will be some delays, and that's the remaining 46%, with only 7% being cancelled as we speak today. Geographically, when we look at that, not surprisingly, 23% of this new hotel inventory will enter the Egyptian market, followed by Ethiopia, and subsequently Morocco, Nigeria, and South Africa. When we look at those figures and we specifically consider Morocco, Nigeria, that's probably around 4,000 hotel rooms, which again, when we look at the current branded supply, this is doubling or even more than doubling the current inventory. I think what this slide is summarizing here is that there is a real opportunity for development. And now, obviously, COVID has really slowed down the current development, perhaps pipeline or the abilities, but the potential is there. Also considering the operating model, and what we have seen, interestingly, is when we compare the traditional hotel agreements to the franchise model and third-party model, which Bani will be talking to us more about in our discussion. Specifically, when we look at the franchise, it's interesting to see that traditionally the number of hotels that are franchised in Africa is around 27%, which is very similar to Europe, far lower than the Americas, but much higher also than the Middle East, which only 11% of the branded supply currently is under a franchise structure. And just to conclude with a few slides here, one being on the sentiment of the travelers. And we've run this survey and we've asked travelers to tell us if they're likely to travel, and if they were to travel, where would they travel to and how soon they will travel to. Obviously, I didn't include every question we've asked. I've just picked those because they're indicative of the more attractive cities or the more attractive countries, and South Africa and Kenya tops the list in terms of these countries or cities that the traveler will look to visit as soon as they can resume travel. And then just trying to understand overall the sentiment with regards to the recovery of the sector in general to 2019 levels. 29% believe it will take a good 3 years to recover, while the remaining 60% forecast a year to 2 years for a full recovery. And with HVS on recovery model, again, taking into consideration how we have seen the occupancy and rate fluctuate over the last couple of years. Some markets have obviously had big gains, some others have lost on account of a number of issues, be it political or economical issues. However, obviously 2020 is going to be the lowest of the low. I think we've established that nothing could be worse than what we are going through at the moment. And the recovery will likely take a number of years, and that's on account of generally global economic correction and recovery, but also factoring in the type of traveler, purpose of travel, amongst other factors. So at the moment, we're looking for the Africa average occupancy to recover to the 2019 levels, or exceed 2019 actually in 2025, and so are we considering similar rate forecasts for the next 4 to 5 years. And with that, I'd like to bring this to a conclusion. Thank you for your patience as I presented those slides, but it was just important to really set the stage on what is happening at the moment in Africa. And so if I could just kickstart really here with you, Bani, the question being, from what you've heard, from what I've presented, and considering also your experience, and I know in the last 3-4 years you have been focusing time, resources, and energy in really understanding the key differences in Africa, especially given in context you're also experienced in the Middle East. What were the learnings? And how is your immediate reaction to these recovery models that I have just shared with you? And what is your future outlook on the market?
Sure. Thank you. Thank you, Hala. Great presentation. A couple of words on Aleph Hospitality. Maybe first, we are, as you mentioned, a third-party management company or an independent hotel operator, in the sense that we operate branded or unbranded hotel. And when it's a branded, we operate under a franchise. We're the leading independent management company in the region. We've been there since 2015, and we currently operate about 10 hotels in Africa. mostly in East Africa, but we do have a pipeline in West Africa as well. And the difficulty of talking about Africa is always the sheer size of it and the number of countries and the diversity of these markets. So my comments along this conversation are going to probably be focused on sub-Saharan Africa. North Africa is quite different than South Africa and sub-Saharan Africa. For us, we consider that these recovery models, I have to say we're much more optimistic than the HVS recovery model. And we're hoping that within a couple of years, our hotels will be able to come back at the 2019 performances. The rebound, we have just reopened our hotel in Addis Ababa. We have also reopened a couple of days ago or last week a hotel in Nairobi. And I have to say the performance still be below the 40%, both of them. But I have to say the performance has been building up quite rapidly. So we went from 5, 10, 15, 20 to 30%, 35% very, very quickly, which is quite encouraging. And there has been a lot of efforts, I would say, by the government to encourage people to travel again pre-second wave. Now everyone in the continent is again quite cautious, and the continent is affected, as you rightly mentioned, by the international tourists, especially from Europe. Europe is a major market feeder for Africa. But again, we should not underestimate the domestic market and the regional market in Africa. These represent in some countries over 50% of the demand, and we've seen it in Ethiopia, for example. We are seeing it a little bit in Kenya and Tanzania, Zanzibar. So we're quite optimistic that by the June 2021, we would start seeing a good recovery trend.
And that's great to hear. And I definitely agree with you, Bani. Markets will likely perform differently. It's interesting you brought up domestic tourism. I'm going to come back to that in a second, because it has done miracles for markets such as Saudi Arabia, where in the past they have put very little emphasis on it. But we'll come back to discuss really segmentation and the source of demand. But if I can bring you, Ramzi, into this conversation, and again, specifically, as I earlier shared, I mean, Radisson is as a group, is very well established in Africa historically. You are in a very nice way blamed for all the current branded supply, but more importantly, also the proposed supply in the market. Which is good news. But where do you identify the opportunities, and what has been the experience so far?
Yes, thank you, Ella, and thank you everyone for the panel today. I think, look, what is important on the echo of what Bani has just mentioned is that the industry itself is extremely resilient. And I think what we have discovered during COVID is the ability for us to obviously find substitute market. And that if you look at it, obviously international traveler used to be a big component. But what we realized in some markets, such as Nigeria, for instance, we're able to sustain higher occupancy because of not only domestic market, but also markets that have been created because of COVID. And that is quarantine business, healthcare system, which has been obviously enforced by government. But also we had, for instance, a client which was, teleconference centers, which had to be relocated and isolated into some of our hotels. So all of those, replacement and substitute market has helped us, I think, maintaining resilience. And that is a positive thing. I think domestic market has been a big learning and intra-regional source of demand has been a learning, as Bani said. And I think for ourselves, we looked at that in terms of adapting also our offering. I think, we look at having not only a commercial strategy to capture that, but also seeking, as we move forward and grow forward in the continent, of ensuring that the product also that we are defining now will translate that. In terms of growth, I think, you've shown it yourself, Ala, was the, the supply where it obviously is. I think for us, the focus countries are more or less the same as what you mentioned in terms of Egypt, Morocco, Nigeria, and South Africa. But I think moving forward, we're trying to adapt somehow kind of a cluster and synergy in terms of really creating efficiency with our operation. You said it yourself today, Radisson is roughly 100 hotels across the continent. I think we're present in 32 countries out of 54, so probably one of the largest presence across the continent. But we certainly wish to grow, and that growth has to be done with a business model that makes sense in terms of synergies. I think, coming back to the business model, I think we certainly look at partnering with someone like Bani instance of doing franchise. It's something that we were not doing before. But I think because today we have reached the scale, I think it's extremely important that we tend to work all together across the continent and finding different opportunities, as you mentioned.
That's great. And it's interesting because, I mean, both Bonnie and Ramsey, you have come into that African market and really are learning about the differences. And as Bonnie said, it's such a huge continent that it would be also unfair to assume that every market is similar. But now to you, Paul, I mean, this is for you, Mantis Collection is a very much, Paul, you might need to unmute yourself. It is a homegrown, it's a homegrown brand, very different, very well established, very successful. If you can tell us a little bit more about Mantis Collection, and really, I mean, in the middle of all this, from my experience, the type of product offering that you have has been the luckier developments in a way that they have been perceived to be a getaway, remote, more unique than the traditional hotels, which rely specifically on, say, the corporate segment, which is challenged, but also more the commercial segment.
Yeah, thank you very much for having me. So Mantis its DNA stems back to a game reserve that my father started almost 30 years ago. And it was very much ahead of its time in that he re-established all the wildlife that had existed there 200-300 years prior. So it was a rewilding project. And so the foundations of our group are built on conservation. And the acronym is a beautiful one for Mantis. It is man and nature together is sustainable. So we try and live by that today. The sadness for us in all of this is, while the corporate hotels, the urban hotels across the continent of Africa are beginning to wake up again, because you've obviously got people wanting to do business, and there is a solid base for a domestic market. We are at the higher end. We are small, and we are very reliant on the international traveler. So we can't necessarily rely on the domestic market. We can to a degree, but we can't get that rate that we demand in order to achieve a 5-star standard, 5-6-star standard. And also remember, we're not just looking after people and buildings. We're looking after wildlife. And that's why we need to achieve those high rates, because we are protecting our wildlife with anti-poaching units, electric fences, all of those things that go into it. So it's a big challenge for our sector. And so while there is a comeback in Ramsey's and Bani segment, there's very little comeback for us in the eco space. But in saying that, I think, as you rightly said, Hala, is that the future for us is an interesting one, because we are playing in the eco space. I think what COVID has done is it's going to accelerate the emergence of a conscious traveler. And for us, that's precious, because that conscious traveler is going to want to, retreat to these more greener spaces, probably extend their holidays, probably travel in family groups, in bubbles, if you like. And this is all as we come out of this mess. But that conscious traveler, I think, is going to wake up to the fact that, they need to go and explore these special spaces more. And so that's what excites us. I think there is a future for Mantis and our other competitors in the space. I think we are well primed for it. And then from an Africa perspective, a continent perspective, what really gets me excited, and I've been beating this drum now throughout COVID, is if you look at the continent of Africa and its wild spaces, and then you compare Africa to the rest of the world, and you look how industrialized the rest of the world has become, particularly places like America, Europe, it's happening out in Asia. Africa has largely been untouched. And as a continent, we've got a decision to make. We can either become and follow our cousins and brothers and become a super industrialized country, or we can embrace what we've got in terms of protected areas and nature. And we're far ahead of any other continent. And is that not the opportunity for Africa, is to take that on and embrace it? Because obviously we see that, the UN have biodiversity protection goals for 2030. And, how does Europe achieve those goals when so much of the continent is industrialized? And will they turn to Africa to embrace and take on Africa and try and protect it? Because Africa could become the conservation continent. It could become the savior for the planet when we're looking at those biodiversity protection goals. So I think it's a very interesting space for us to be in. Obviously, the urban piece of it is so important too. You know, for Radisson, for Accor, for all the other big players, for Bunny, for your business model. But I think there's a great opportunity for Mantis and all the people that are playing in the eco space to really expand on that model. So it's exciting.
Oh, definitely it is, and I cannot, agree more. Especially also now looking at the sort of developments we are involved in as HVS, and the mindset of the investors, and the change in that mindset into really moving out of the traditional hotels, but more into creating the experiences, blending in with nature, blending in with the culture. And I think everyone on this call would agree that this is also a result of the traveler preferences. And perhaps what COVID will do is also allow us more time to travel and look after our personal experiences when we don't necessarily have to travel as much for work. That's my view when we talk about the corporate demand. But I mean, you've touched on a few points that I just would like to start now really breaking down this discussion. And perhaps if we can initially talk about Africa has a huge potential. And we're not disagreeing about that. I think from tourist arrivals as well, there's a huge potential for it to capture more of a share in terms of international visitation. Again, in the Middle East, when I first arrived in the Middle East 15 years ago, the share of international travel was 5%, and now it's up to 9%, which is a large share in terms of numbers. But that has come really on the back also of the commitment of the government support, facilitating of the travel in general, and obviously the infrastructure. With Africa in particular, it's been a couple of years that the challenges are highlighted. We all know and we're confident about the potential of tourism. With that said, there seems to be, we're stuck in few areas, specifically as it relates to financing, as it relates to travel connectivity. So, Bani, you mentioned domestic demand initially, so I'm going to start with you on that one in particular. Domestic demand is much easier because you really don't have to worry much about travel connectivity and bringing people in, and perhaps there is more tolerance to not having the right infrastructure. But moving the needle into Africa being a much more developed continent, what do we need to do as governments, as individuals, as investors, as operators?
Yeah, no question that the airlift is still an issue, and connectivity is still an issue in many countries in Africa. And, as an organization, we are based in Dubai, and sometimes we say it's easier when we are in Africa, it's easier to come back to Dubai and travel to another country in Africa, right? But within the countries, big countries like Ethiopia, like Kenya, like Nigeria, South Africa, etc., domestic travel is relatively easy by air. Some of the countries have added trains, railways. So pure domestic travel within the country, I think, is quite easy. There are some challenges here and there, flight cancellations and raids, etc. But the infrastructure is there. The untapped potential, which is still represents a good portion, is the regional African tourism. And in my opinion, if airlift and transportation in general were better, there will be a much better, bigger opportunity for all these countries to benefit from. So there's clearly an amazing opportunity for low-cost airlines to increase their reach within the African continent. But from a visa standpoint, most of the countries, they have allowed visa on arrival. So this is great. What is needed, however, in terms of development or the capital is the investment and facilitating access to both equity, but also, most importantly, debt. And there, the government, I think, in many countries could have a bigger impact if they put their strength in behind the banking sector.
Yeah, agreed. And I think this is what we have also discovered with the number of clients that we've worked with. The opportunity has been identified, the returns look good, and the project is stopped or doesn't even break ground simply on account of financing, which always seems to be quite a bit of a challenge.
Well, that's yeah. I wouldn't. Sorry to interrupt, but I don't think I would always blame it on the banks or the government. You know, from our experience, again, what we've
I'm
seen.
provoking you. I want you to blame someone else as well. So we've got the bank,
Yeah.
we've got an issue with
Listen,
finance.
no. Listen, there's no. Listen, it's a maturing market. It's a market which is in the process of maturing, right? So. You know, hospitality for many investors is not the first choice. And what we found across the African continent is the individuals or institutions who are investing in the hospitality business, they have made their money somewhere else, and mostly in trade or mining, but mostly in trade. So hospitality is a relatively new aspect, and it is still at its infancy when it comes to investment. So you have a lot of investors who, you know, they have a plot of land and they say, okay, I'm going to build a 100-room hotel, and then they start. But because there's a lack of experience, and they're not exposed on, you know, what it does require to build, you know, 100 to 100 rooms hotel, then along the way, they start facing challenges and developments are delayed. So whether it's financing, whether it's construction, whether it's procurement, you know, whether it's local approvals, etc., there are a number of challenges. So there is a problem which is not only related to the governments and the financing, but there's also initial challenge, which is you know, applicable to any I would say market, developing market, you know.
Right. And we've seen that obviously in other markets. We've seen it also initially
Absolutely.
in the Middle East. So, you know, but as long as you're able to iron out these issues, then the potential is a huge. Ramzi, what would you add to what Bani has just described as being some of the challenges and opportunities? And specifically, you know, one of the other challenges I personally think in Africa is also staffing and resources. And if you could just add to what Bani said, but also keep in mind, I'd like to ask you, you earlier on said, this is why we're partnering with the likes of Bani. Does that have to do anything with those challenges or also the resourcing and the staffing?
Yeah, sure. A few elements just to complement on Bani's answer. I think just to close on the domestic tourism, I think one element that is inherent to domestic tourism is actually the raise and increase of middle class income. And that is something that, you know, obviously is linked to the economy of a country, because who truly is that, you know, domestic tourist is someone that has middle class, you know, is having discretionary income and has the ability to obviously spend on. And that has to be, you know, in relation to government responsibility to grow middle class income, which you will see in some countries like Egypt, where probably you have one of the largest middle class income section, which, you know, will justify domestic demand. So I think moving forward is that growth that will certainly justify moving forward their spending ability. As Paul mentioned himself, you know, domestic today is insufficient at a price level that, you know, not only Paul, but a lot of hotels which are branded would justify the spending. So I think that growth economically will justify it. I mean, coming back to one thing that, you know, I think Bani was touching, and I think which is actually even more relevant, is the construction cost that we see in Africa. And that's, you know, beyond the financing, where also often projects get delayed or certainly have erosion, is because the construction cost is such that the financing is difficult to secure. And that's because construction costs in Africa are probably, I think, the most expensive worldwide. And that is related to many things, you know, it's the ability to procure that, you know, everything comes from outside. You do not have local talent. So coming to your comment of sourcing, it's not only staffing as, you know, staffing the hotel, but it's also staffing the construction teams. And often cases it comes from outside. That obviously has a cost component to it. Customs, the ability to have, you know, ease of customs and importing, you know, tax duties. All of those things together build up that, you know, construction cost is still very high in Africa. Obviously, some countries more than others, but that's, I think, where we need to source and certainly, you know, improve moving forward. And that's related to everything that has been mentioned, the logistical aspect of it, the ability to move goods in a more efficient way, in a more cheaper way. And that's eventually will translate in a lower development cost. Coming into staffing, you know, obviously this is in any emerging markets, you know, local talent and you know, the responsibility we have as Radisson itself to train people is priority number one. The service industry is a people industry, so eventually I think for us it's certainly the priority number one. Some countries, do not have the same, let's say, academies or support that we would require. So obviously a lot of activities are done by ourselves privately, but I think this conjunction of public sector and private sector in creating the schools of tomorrow. I mean, I think Bani mentioned the same. The industry is not always the most appealing at first. I think this is something that has to be changed. The perception of the industry is a growth industry for a lot of people, but which is also, you mentioned yourself in terms of GDP contribution, one of the largest employment in the continent. So I think it has to have a lot more merit in terms of joining the industry and making efforts, jointly between public and private sector, but to create those academy, creating those schools where then, yes, you can certainly facilitate the growth of local talent. And on your last point of where would you see the value of Bani instance in his business model, it's nothing to do with the ability of staffing. I think it's the ability to reach market, which, will not be the priority as of now for Radisson, but where we see certainly potential and opportunity, but, with someone that can create that scale. And I think Bani is extremely, prudent, but also successful at doing that, meaning he's creating scale in certain countries where he can operate, and that scale will obviously justify better efficiency in his model, but also for us. And I think that's what we look at. I think today, as I mentioned to you, we're looking internally at creating cluster of hotels in certain region and in certain countries, but as we move forward with partner, we want to establish the same synergy.
Thank you, Ramzi. I mean, this is what I was trying to get at, perhaps, putting a list together of what the challenges are, and some of them we're going to be able, hopefully, to work around them as these markets mature and evolve, with also support from the government and better economic recovery. But we kind of really nailed down at the moment the different challenges that people not necessarily in Africa or with experience in Africa would not necessarily know why it has been slow to develop, despite identifying the opportunity. And no one is disagreeing about how important it is, especially when it creates employment, what it does also to the countries and to the economic wealth. Paul, if I can bring you into this conversation, but just before I ask you to add to Bani and Ramzi, it's interesting what you shared with us about the current performance of your lodges or product, because when we look at the Middle East, some of the most successful hotels during the lockdown has been those that are remote, whether they're island off land, or those that are at a distance, and they've done exceptionally well, definitely from domestic tourism, perhaps not at the price point that these hotel owners or operators would have wished for, but they were much more occupied. So I'm assuming it's very different to you in the sense that there is definitely a higher reliance on the international travel market and a much higher price point, that there wasn't an opportunity for you to capitalize, if I heard you right, during the lockdown.
Yeah, listen, I believe the Middle East has achieved that, and that's great news. But it's about the domestic market again. So that is the challenge for us. Also I refer specifically to our game reserve. Unfortunately, it's in one of the the poorest province in South Africa. So we aren't able to feed off Johannesburg or Cape Town because we're so far away. But reserves local to those areas are thriving too. They're doing well because they can feed off those bigger cities where there is wealth. We just very sadly in the poorest, so that hasn't helped. But it'll come back. I mean, we're confident it'll bounce back. And during all of this, we managed to actually sell a piece of land to a Persian family, and so we're going to be developing a game reserve very close to ours, or an eco lodge very close to ours. And they've got a lot of faith in South Africa, because I know Ramzi raised the point that the cost of construction across Africa is very expensive. Fortunately for South Africa, we manufacture and develop our own products down there, so it is a lot cheaper, and it's quite attractive, because I think everybody's desperate for work down there, and so your construction costs are probably 20%, 25% lower now. So this Persian family has seen that as an opportunity, and they just want to build the ultimate eco lodge. They want Mantis to do it for them, so we'll provide a turnkey solution for them. They want the lodge to be off the grid, and they want us. A lot of people approach us because we are very much into the guest experience. So it's not just about lying on the beach now and enjoying a cocktail. it's getting stuck in. And so, you know, with this particular lodge, we are not just we're trying to turn the whole game reserve model on its head now. And you know, it's not just about bouncing around in a Land Rover for 2 or 3 hours in the morning and in the afternoon. It's about an experiential trip. So if we're going to be doing work on a herd of elephants, rather than the vet and his wildlife team only getting exposed to that, let's get the guests to go and experience that too, because what they're going to learn from that. And you can imagine the Instagram moment that they're going to be exposed to too. Yeah. So, you know, that, and you know, let's do a zip line over the reserve, and so we'll call it the flying safari. And so we're really playing around with a lot of fun stuff, and we've been very creative throughout lockdown, so much so that we're going to turn our little lodge down in this particular province, this very poor province in South Africa, into the world's first ever eco lodge innovation hub. And so the idea is to bring, we've got a functioning lodge which runs commercially, and we're going to be developing 5 new room concepts, which will be built into one of the valleys, and a couple of those will be tents. One is going to be a tree house, the other is going to be a pod. And the idea is then, when we have investors interested, let's say for instance from Saudi, can you come and develop the ultimate off-the-grid eco lodge in Saudi? Well, then we'll say, well, bring your team down to our eco lodge innovation hub and come and experience the different concepts, figure out how to get them off the grid, and learn from us, because we paid school fees over the past 30 years, and we'll develop for you the ultimate lodge in Saudi. So we're moving in that direction too. So it's not just about the guest experience; it's about the investor experience. Right. So that's a whole new chapter for us. And then I think leading on to the skills, as Ramsey said, I know Radisson have got their own programs, and it's a huge part of what we try and do. But because we're so small, we can't obviously accommodate every student on an internship. We partnered with a Dutch university called Stenden, and they decided to open a whole campus down in our province in South Africa, in the same province. It's called the Eastern Cape, by the way. And so Stenden University have a satellite campus in the Eastern Cape of South Africa, and they get a lot of Dutch students coming to this campus because it's because of its Dutch roots. But they also get a lot of Africa students coming down to be trained in the world of hospitality. And you get it's a 3-year BCom degree. You get a degree in hospitality management. They also have a course in disaster relief management. And one of the unique features of that is that it is probably the only university in the world that has its own game reserve. And so the students, one of the semesters is that they'll do a semester in wildlife and lodge management. So the students move from the campus onto the game reserve, and they're based there for 3 months, which is pretty unique. So that's a big part of what we do too, is you know, skills development in the hospitality space, because it isn't the most exciting industry in terms of what you think you can earn and everything else. And we're trying to make it super interesting, because it is going to become such a big you know, benefactor to the world of hospitality.
And that's very exciting, Paul. I must say, my mind is racing to the next time I'm going to go on a trip, experience something similar. So thank you for sharing all this. I'm very conscious on time, so I'm just going to conclude with one last question, really wrapping up a couple of points, but more importantly, what you've shared with us, Paul, is obviously very much a product differentiation and also an experience differentiation. And back to what Ramsey had mentioned, but also Bani, when we're looking to advise clients on what to build, and I don't want to generalize, but I'd like you really to think about in the sense of where does the opportunity lie in terms of asset class, type of development, on the basis that obviously we can work through the costs. And I have a lot of experience with seeing these costs way over what the markets can afford. And I think this has been always the challenge, all the way from Egypt and upwards, that, you know, if you cannot achieve a certain rate and a certain NOI, then no, you cannot spend $300,000 a key, full stop. I mean, there's nothing you can do about that. And I think there's general agreement that unless it's a very unique experience, the African continent does not necessarily demand the highest rates, and really fine-tuning between the sort of development but also the returns to the investors. So I'll start with you, Bani, then Ramzi, and conclude with Paul. What sort of asset class do you think would be the focus, and what sort of type of experience?
Yep. I mean, as far as we're concerned, what we're seeing and what I believe, again, if we have to generalize, but it's the mid-scale, limited service and mid-scale number one across the continent, for the very good reason which you have mentioned, and that's the price point. And with the upcoming middle class and the increase in regional and domestic tourism, this is going to be the right segment. But there's also another untapped segment, which is the long stay, a proper long stay segment, where we can see that in many of the capital cities is still in existence, and there will be an amazing opportunity there for residential long stay serviced apartments.
Great. Ramzi, do you agree, disagree?
No, look, I agree. I think if we look at historically for us, obviously 70% of our pipeline was mainly on Radisson Blu. And that was because it was our core brand. I think if we look now today and what we see as a trend moving forward, very much, correlate to what Bani mentioned, which is, that's kind of mid-scale to upscale level, which is, whatever we have under Parkin and Radisson itself. And that's what we see moving forward. So yes, justifying, the development cost, justifying, the market pricing. And I think that has been done. I think also as the configuration over time would probably be reviewed, meaning, something which is clean, lean, probably less meeting facility as we move forward, something which is probably, leaner in terms of an overall operation, but also development model itself. But yeah, I think what Bani mentioned is something that I was going to say the same, is what we have witnessed globally is the resilience of service apartment has been a big, winning factor during the crisis itself, during COVID, and we've witnessed that ourselves. We did not launch, a service apartment concept, as a brand itself, but we do have, and we have more than 50 service apartment, either as a standalone and mixed use. And that's something we will move forward, I think, in Africa the same way. And I think because it opens up a different profile of investors too, as we see it, residential was very much residential developers. Now, if you bring this concept into hotel apartments, then you can start having, the same success that we had in the Middle East, as I'm sure you know, Hala, it's very common here. And that will be probably repeated itself in the same success of having a residential developer entering into the hospitality, but with a risk factor, which probably is less.
No, absolutely. And I definitely agree both on the product, the service apartment and its resilience, and performing better even at the more difficult times. I think the only concern I have, and I'm really glad to see that you're both agreeing in terms of what assets are required in the market, that you must have a similar experience also in the Middle East, that initially when these cities are developing, everyone would like to have a 5-star and luxury asset. This is typically where the mind races to. And from that point onward, once you're very well established and perhaps in an oversupply situation at that very high end, then comes in the mid-scale hotels, which if we look at the Middle East, historically, we've only seen really the emergence of mid-scale hotels only in the last 3 to 4 years, although, you have been really pushing forward with tourism. I am agreeing with you as well from a financial standpoint. For almost every study we have done, 8 studies out of 10 would suggest that there is a cap as to how much you can spend and the rate that you can achieve, especially again when we're looking at the corporate and the more traditional hotels. With the experiences, however, this can be totally different. And Paul, now to you, if with that same question, where do you think, we've established definitely that there is so much potential for Mantis and the likes of these types of the unique experiences. My understanding also, you will be transporting out to the Middle East and elsewhere, but where do you see the real opportunities in terms of markets specifically?
Yeah, thank you. Now, listen, I agree wholeheartedly with Ramzi and Bani, and I, in fact, had a conversation with our partners at Accor this morning because they own 50% of Mantis, right. And they play in that space, and 100% in agreement. It's the branded residences, which is obviously the big opportunity now, and that mid to upper scale, which is emerging. So I think that's exciting for them. From our perspective, it's eco lodges we've spoken about. I think I've exhausted that. I would say Southern Africa is a little bit saturated. There's a lot of players down there now. But for us, which has been incredibly fascinating, and I've been calling it the oyster of Africa, is Rwanda. And, you know, there's a great infrastructure, government, lots of stability. It's just a fascinating little dot in Africa, which is becoming, you know, the perfect showcase for the rest of the continent. And so we've got a big footprint there. We're fast becoming the largest hotel group in that little country, and got close ties to the president's office. And, you know, you've seen what they're doing there with the gorillas and have done for the past 20 years, which has been phenomenal. It's now about the chimpanzees down in the south and Akagera National Park on the eastern side of the country. So you can do a big 5 wildlife experience there, but you can also do the gorillas and the chimps, which is amazing. And so we're creating a whole circuit around the country. And one of the interesting things that we're doing is, because you'll see if you do a bit of a search on Mantis, we've got eco lodges, we've got boutique hotels, and we've now got waterways. And the waterways is all about sort of a river cruising experience. Now, if you look at Europe, the fastest growing segment in the leisure space is river cruising, and it has been for many years, because you can go and sail on the Rhine River, and there's a whole network of amazing rivers across Europe. And so we have a boat called the Zambezi Queen, and she has 3 little princesses, and they sail on the Chobe River, which becomes the Zambezi River, and ultimately the Victoria Falls. That Zambezi Queen only has 14 rooms. It is probably the best performer in our whole group. It's massive year-round occupancies at a very high rate, and it's a way of seeing wildlife from the water. So it's a phenomenal little boat, and what the result of that has been is that we've had inquiries now to do a series of boats on other waterways across the continent of Africa. So we are the next stop for us, and we hope to launch our next boat will be around May, June, which is on Lake Kivu in Rwanda, and that's going to link the chimpanzee experience with the gorillas up in the north, and you'll be able to do it by water, which is going to, we've got the Kivu Queen will launch, and she's got 10 berths. We've had inquiries for Lake Victoria as a next stop, so we're going to be hopefully rolling out a boat series there too. So that for me is fascinating, when you talk about just flipping the traditional model on its head and differentiating yourself and everything else. So that's fun. We're going to have a lot of fun with that. And then I think your last question to me was, you know, how are we expanding and taking that Mantis DNA to other parts of the world? And, you know, if we were to do that alone, it would have been challenging. But because we have the backup and the support of Accor behind us now, in terms of giving us loyalty, giving us online distribution, and really helping us take this eco model internationally, I think it's a very interesting journey for them. Because if you look at the Marriotts and the Hyatts and the Hiltons of the world, none of them really have an eco brand, and suddenly Accor have landed a very interesting brand, and they now they own a piece of us. So together we are on a mission to take the eco DNA to other parts of the world, and we are now getting master plans coming out of our ears. We're doing a fascinating one in Norway for a whole series of eco lodges. We're doing a master plan for a great opportunity in Oxfordshire in the UK, and we are very busy in the Middle East, as we discussed earlier, from Ras Al Khaimah to Bahrain and hopefully to Saudi, amongst other countries. We're also talking to a Jordan family about doing something potentially in Petra and on the Red Sea. So it's a very interesting time for us. It's early days, but I think with our big brother watching over us, as in Accor, I think we're going to achieve greatness. I think there's a great future for us in the eco space, and we're very excited about it.
It's very exciting, I mean, to hear all these development plans, and thank you for good energy really to conclude this extremely insightful discussion that we're having. I hope this really has added value on just trying to look at what the current status quo is, but then capitalizing on what the future potential is. Bani, Ramzi, and Paul, thank you very much for joining me today. And I wish you to stay well. And hopefully in 2029, we won't be talking about this, but we would be actually out there in Africa experiencing it. Thank you and stay well.
Thank you. Thank you, everyone. Thank you, Hannah.
Thank you, guys. Thank you. Thanks, Hannah. Bye.